Hello friends, hope you are doing great at your place. You are safe, healthy and strong. Today we are going to discuss again the tax returns. I know it's going to be lengthier, but that is how it works. There are a lot of schedules, lot of different income calculations that need to be done through these tax returns. And the most important, that there are certain changes in the tax information, in the tax format, especially after 2017, that has been done to tax return. That is why it is becoming lengthier, right? I know there are a lot more sessions that are going on and still we haven't reached how to calculate income. But before moving to income calculations from tax returns, I wanted you to be very confident on the different schedule of tax returns, right? And what are those changes that took place after 2017. However, a couple of more videos that have been uploaded in the past, right? You can go through them and could see like what were the changes that were made to 2018 and today. Straight away we will be starting with our 2019 tax returns. We are not going to see what changes that have been done in the tax returns, because that is already, there were 76 lines, and those 76 lines were containing all the income and tax information, right? But now that the line numbers have been reduced to almost 24, right? So in those 24 lines, all the information have been clubbed and disclosed, and whatever information is remaining or have been clubbed, that is being shifted to, or that has been shifted to different schedules. I mean, when I say different schedules, then I would again reiterate that there are 6 more schedules that have been included to these first 2 pages, and whenever they get applicable, they become applicable, the borrower need to, or tax filer need to update those and need to club with their tax returns. But if they do not apply, then they need not to be included with the tax returns. Okay, let's start with these tax returns. What are all information that appears on the tax returns? I'm not going to repeat again the header of the borrower information, because that has been already discussed in my previous video, which is all about borrower names and dependents, and whether borrower filed the status as single, married or head of the households, and what all different conditions or what all benefits they get because of their filing status. So that has been already discussed. Let's move straight away to the income lines or the tax lines, right? Let's go to the line number 1 that you could see right at your screen. The very first line, that is about the wages. What is in this line? So wages, salary and tips. Remember, right, whenever borrower is filing individual, means only one borrower or one applicant is on the tax return. Whatever they have earned in the previous year, whatever they have earned in the previous most recent year, that income is going to appear on here. Like if someone has worked with one employer and they earned 10,000 or 100,000 income, right? $100,000 income in the previous year, it is going to appear here. How we can compare this income? What is the document? That is W2, right? W2. Whatever the income they earned in W2, that income is going to appear here. But the twist is, if borrower is not filing the tax return as a single, but filing as a married, then and the spouse of borrower is also working, then there might be plus 90,000 income that has been earned by the borrower spouse. Then it is going to be 190,000, right? 190,000. So this cell or this line is going to club all the incomes that has been earned by the borrowers. We need to be very careful whenever we are reviewing income, especially for the wage earners, and we need to see how that tax return has been filed. What is the filing status, right? And how many borrowers, whether both borrowers are working. If even sometimes both borrowers have filed, or tax return has been filed by a married couple, but only one person is working. I mean, borrower is working and the other person or spouse is not working. In that case, we can easily assume that it is the only income that has been earned by the borrower. Okay. The next is tax exempt interest. Now I'm going to explain something different. Number 2, 3, 4 and 5. There are two sections, A and B, line 2A, line and B. So what I'm going to say here, all these left side the column, that is going to give us the income that is non-taxable. Let me give you an example. What happens if borrower has earned SSI income? Giving you an example, it could be interest, dividend, distribution, pension, social security, any of them, right? But I'm not going to explain what all these incomes are, how they works and what are those incomes, because that has already been thoroughly reviewed with you guys, discussed with you guys in my previous session. So today we are only going to see what happens when they are taxable and non-taxable. Okay, so let's take an example. There is an SSI income, borrower is receiving SSI benefits, and what happens then? They may have received $12,000 of dollars in the entire year. Okay, now we come to know that we may assume that okay, these 12,000 are, whether these 12,000 are taxable or non-taxable. We can straight away come to the tax returns. Instead of reading out their award letters and different documents, we can straight away come to the tax return. We can see, okay, here is the social security benefit. There are two columns, one on the left, one on the right? So whatever the income written on the left side, that is non-taxable, right? And whatever written on the right side, that is the taxable income. That is taxable income, right? So out of this 12,000, if it has been written as 10,000 here and 2,000 here, that means 10,000 is non-taxable, 2,000 is taxable. Now, why we need to see this? Because if we have to gross up the income, remember 125%, or we can gross up income for 125%, right? In my previous video, I have shared that in very detail, that when we need to gross up, how to calculate that gross up income, right? So I'm not going to repeat that, but here I'm just going to share the logic, how to gross up, what portion of the amount that could be gross up. So in this case, borrower has received total benefit of 12,000, but we can, from tax return, we can easily see only the 10,000 amount is only the non-taxable. The rest 2,000 is taxable. So we can gross up only 10,000. So in that case, if we are going to gross up it by 25%, the 10,000, right? $10,000, if we have to gross up by 25%, it will become 12,000, right? 500. This is the amount it's going to be. Then we can divide it by 12, and whatever amount coming, that would be the monthly income, right? This is the gross up amount plus 2,000 income that was taxable. So total it is now 14,500 divided by 12, and that is how we can bring out the monthly income, right? I hope that makes sense. That is, all these lines are left side, these taxable, tax exempt interest. Somebody is receiving interest from any income, right? Any saving amount, and that amount is exempt from taxes. That amount need to be written here. Maybe someone, again similar to this example, somebody earned 10,000 interest throughout the year, and out of that 10,000, the 6,000 is exempt from taxes, but 4,000 they have to pay taxes. So they are going to This is how we are going to separate the amount, right? For 6,000 non-taxable and 4,000 taxable amount. For similar for the dividends and IRA distributions and pension and annuities and social security. Then the capital gain and loss. Best thing is that all these incomes, their schedules are written in front of them, like tax exempt schedule B, right? For capital gain, schedule D, or loss schedule. Now for the IRA and social, we know, or wages, we know what documents we need to cross verify. Those are W2. For social security, those are 1099s, and for retirement, that is 1099 award letter as well as 1099. So those are different documents. But wherever we need to fill out a schedule, right, those schedules are also written in front of these documents. Like for tax exempt, for qualified dividends, it's schedule B, and capital gain and loss, it's schedule D. So whenever any income that we need to consider, we can directly go to these schedules, and from there we can consider that income. Okay. Now I'm coming to the line number 7, and that is the most important. Other income from schedule 1, line number 9. The main important is schedule 1, line number 9. Previously, what was going on? All these other income were also listed in these pages only, in the tax returns, line number 12, line number 13, line number 17. So different income were written. Now those lines have been eliminated from these pages, and all that information has been moved to different schedules or additional schedules. What are those schedules? Those are schedule 1, 2, 4, 3, 4, 5, 6. So there are 6 more schedules. Other income. Other income means if somebody has received alimony, somebody has received tax credit, somebody has received income from self-employment schedule, or it could be like different self-employment that we are going to discuss in detail now. So other income, whenever those type of income, all that income will be clubbed and will be written here. From where, whenever there is any income written on this other income line, then we need to go as written schedule, go to schedule 1, line number 9. So first of all, we will go to schedule 1 and we will see what type of income it is there. Okay, so let's go to schedule 1. Schedule 1, part 2. There are different parts, and part 1, part 2. Part 2 is not as relevant as to us, especially for the underwriting, because we are here discussing the income. Remember, whenever line number 7 or at the first page is showing other income, then we have to go to schedule 1. So these are the different lines from 1 to 8. All these different type of incomes, whatever the source of that income, that has been written here, right? These are the lines, these are the different source from where borrower earned the other income, that is appearing on the line number 7 in the first page, right? So these are the different sources. All these incomes have been written on in front of these lines, and then they have been added together at the line number 9, and then that total has been written in the first page, right? So whenever whatever income written in the page number 1, line number 7 as other income, we are straight away going to come to schedule 1, and from here we could see what all other income is. That there could be possibility that borrower has only received one income from all these sources, and that income is appearing at the line number 9, and that has been written in the page 1. But there is a possibility that borrower has multiple sources to receive the other income, right? We are just going to see what are those other incomes, or what are all those sources. Okay, the great. So first could be taxable refunds, etc., right? So taxable refunds, credits, whatever borrower has received it, that is taxable, or that has been taxed by the government, right? Then whatever that income borrower received, that will be written here. Now the next is alimony. If any borrower has received alimony, support, alimony income, that will be written on the line number 2, right? And in date of original divorce or agreement of when that document was executed, that date need to be written here. That whenever we will be reviewing the alimony income, how to calculate alimony income, what all documents need to be reviewed, we know that this date could be verified from the divorce decree, right? So whenever we are going to review the divorce decree, I will let you know what need to be checked here or what is the relevance of this date. Next is business income or loss, Schedule C. It is written Schedule C, right? So whenever borrower, I have already told you in my previous video, whenever borrower is a sole proprietor, right? Remember, sole proprietor, like borrower has a shop or maybe some other kind of business where he is the only owner and 100% owner, and he may have a couple of employees as well. So that kind of business is always going to appear on Schedule C. Or then the next is other gains or losses from losses. Other gains or losses means form number 4797. This form belongs to actually whenever borrower is going to sell a property, right? It could be long-term gain, it could be a short-term gain, it could be a long-term loss or short-term loss. That we are going to review from the form number 4797. What I am saying, whenever borrower is going to sell his property, any property he has sold in the previous year, right? Whatever he gained or he got some loss, that will be written here. And whenever that is written and we have to calculate that income or we have to consider that income, that could be, then we have to go to form number 4797, right? The next is rental, real estate, royalties, partnership, S corp, trust, etc. Whenever these type of incomes appear, rental income, royalties, partnerships, S corp and trust, whenever all these type of incomes are going to appear on what schedule? Schedule E. Again, borrower could have rental income as well as partnership income or royalties and S corporations. In this line, there could be different sources or only one sources. Whatever the income written in front of this line, we cannot assume that whether it is a rental income or royalties income. We have to go to Schedule E, and there we need to verify what type of income is this. There is a possibility that income that is written here could be addition of rental as well as partnership. So borrower could have partnership and rental. Suppose borrower had $15,000 he earned in the previous year from S corp income, right? And almost 2,000 from rental. So here this we will only get to know from Schedule E, right? Even in this, when we go to Schedule E, there are different forms that will be applicable on that also. When we will go to Schedule E, that time we are going to see what are different forms, those are applicable there. But just to make you understand on the Schedule 1, these are the few documents, right? From where we can assume, we can see that okay, where this income is being driven. So this income has been brought down to this page from Schedule E, and there could be different incomes at that schedule, but here both will be clubbed together and will be written as 17,000, right? So we cannot assume that okay, like in the tax return page 1 line number 7, we cannot assume whatever amount written there that what is actually this is other income, but what is the source? To get that source, we need to come to Schedule 1. And whenever whatever income written in the Schedule 5, we know that it could be rental, it could be royalties, it could be partnership, S corp or trust. But still, we know that we have to go to Schedule E. This is the total income 17,000. But what is the source of this 17,000? Then we have to go to Schedule E. There we will get to know what are those incomes, right? We will go to Schedule E and we are going to see how to calculate income, right? Okay. Then next is farm income. What is it? Whatever the farm income, it will be given on Schedule F, and we are going to calculate it from there. Whenever someone borrower is getting any employment compensation, if borrower was unemployed in the previous year and they have received any unemployment compensation, that they are going to write here. And any other income, there could be other income as well, like someone has won some income from some money from casino, that could be also an income. So those kind of income could be written at the line number 9, and then they are going to add all the income, and that total income is going to appear on the line number 9, and that is appearing on the page 1, line number 7. So that is what the Schedule 1. From here we can get the source of income, other income, that is appearing on the page 1. And now we are going to see one by one all these schedules, and we are going to see how to calculate income from Schedule C, Schedule E, or rental income, or S Corp income, or other income like farm income. We will go through all these forms one by one and we'll see how to calculate income. First of all, let's go to the Schedule C and see how to calculate income.